Today I am going to show you how I am digging and I am sifting through the stocks of small companies. I am going to find 10 stocks that I think are going to wallop the market. And I'm going to show you my method for how I do the research, how I learn about these small company stocks, so that you will have the tools that you need. The tools, you got it? The tools that you need to do your own research and learning, because I want to help you to become a much better investor. Hey you guys, my name is Jeff.
My name is Jeff.
Welcome or welcome back to the channel. So small companies are more likely to go out of business than large companies. You know, think about it. Microsoft, Amazon, Apple, Google, not likely to go out of business in the next 5 or 10 years. But these small cap stocks or these small company stocks have a increased likelihood of going out of business. So for this increased risk that you take, you expect a greater return to come to you as an investor. So what I'm going to share with you here in this video are the 5 things that I do that I think decrease the risk of permanently losing your money as an investor, and kind of give you a little bit of an edge than if you just sort of mindlessly went in and chose small company stocks or just took the recommendations or the words of other people. Now, one thing I also want you guys to know is I'm going to be buying 10 stocks. Haven't bought them yet. I haven't bought any of these 10 small cap stocks. And going in, I realize that some of these stocks will probably not work out the way I'd hope. And I just don't know which ones. But my approach is, you know, if I could get 6 of these to be successes, if they are positive returns, and the 4 that don't work out, I maybe lose money on, but they're offset by 6 that win. And if I were to be able to get like 7 that work out well and 3 that don't, I would be totally happy with that outcome also.
Okay, no. That, you are so not, oh God. False.
So, you know, I know in a lot of videos people say, including myself, this is not financial advice, kind of as a disclaimer just to protect yourself or whatever. But I just want you guys to, you know, realize I'm not just saying this is not financial advice, because I think it's really important for people watching this to realize I do not have any secret cheat code to knowing which stocks will work out. So just because I'm going to be talking about stocks in future videos that I'm buying, that does not mean they are going to win and they're going to do well. I'm hoping for and expecting a positive return, but like I said, 3 or 4 out of 10 might be failures, and I'm willing to live with that because I'm looking at the overall return of the whole portfolio of 10 stocks. I'm going to be digging through information, all this stuff about small company stocks, and I am going to be sifting through all of the information I can about these companies to learn as much as I can, because I believe that by doing your research ahead of time, by really learning about these companies, sifting so that the good stuff stays in there and the other junk passes through, I think you stack the odds in your favor of a good outcome. And so that's what I want my portfolio to do. And I want you guys to learn through watching this. So here are the 5 tools that I use. And because I believe, you know, there's a quote by an investor that I really love this quote. It's by Charlie Munger. He says, "Take a simple idea and take it seriously." I'm taking this simple idea of investing in small companies and I'm taking it really seriously. This is my job. I think it's very hard to track and to learn about, you know, 20 or 30 or 50 different companies. I think that's just too many. But I think 10 is within what's manageable. So take a simple idea and take it seriously. So the 3 tools that I use Morningstar's Investment Center, I use Value Line surveys, and I use YouTube. And the first 2, I get these databases through my library. You might want to check where you live. Morningstar and Value Line might be free if you have a library card. And if you don't, they're also available for pay. You can just subscribe to these services. And then the free one I use is YouTube. So what I do is I try to learn as much about these 5 things I'm going to show you through Morningstar and Value Line, and then once I understand the company and I understand that it's profitable, then I go and I watch YouTube videos. I usually look for the CEO of the company or whoever is leading the way, and I want to understand them and their vision and get a feeling for whether I want to be an investor. So the first thing I do is I only look at small companies that are somewhere between $2.5 billion and about $10 billion. And the reason for this is, when you're looking at really small companies, so like 700 million or 500 million, if they're in the millions, I figure this is way too small and way too risky, because they might have a bad couple of quarters or a bad year and they could lose like all their money and they'd be out of business. But once you've made it to 2.5 billion, I think that is a large enough company that it's not super high risk. And then beyond, 10 or 20 billion, you start getting into mid-cap size and larger companies. And I want to keep these company sizes small because I think it's easier to grow when you're small than when you're a really big company. So 2.5 billion to 10 billion, that's the first filter. That's the first thing I want to look at when I decide on small companies. Now, the second thing is I want the company to be profitable. I'm going to show you what I mean by that. When I pull this up on Morningstar, they show a numeric representation of profitability, but I also like the visual. I'm going to show you what the visual looks like. So for the first stock I'm going to show you here, this company, the blue line represents revenue. So that's money that comes into the company through selling things. And then after they pay all their expenses and their costs, which could include paying their employees, paying software developers, buying materials to make whatever products they make, whatever's left is the income or the profit. But if a company is not profitable, this red bar of net income is actually below the line, so it's in negative territory. So this first one you can see in 2020, 2021, and 2022, the red line is growing. So that means they're losing more and more money each year, or their net profit is decreasing. So these are companies that are not only not profitable, they're losing money. So I try to stay away from companies like this one. I'm showing you the kinds of stocks that don't make it into my portfolio so that when I show you ones that do, you'll see why they're different. And now in this stock, you can see that red bar is all negative. So these are companies that are losing money, even though a lot of money from investors is going into buying these stocks. Now here's one that actually really interests me, and I'm not buying this one, but this is the kind of small cap situation you will see where in 2020 it was losing money. The net income is red and it's below that line. But in 2021 it increased, then in 2022 it got smaller. Now, for companies even like Amazon, there were times when they weren't generating a profit. Same with Tesla. So I don't think it's altogether horrible if a company is in the negative side when it comes to income, but I think for my purposes, I'd rather invest in companies that are already profitable. This last one here is an example of a company that is just hemorrhaging cash. They're losing money, and this is the type of thing that most investors will want to stay away from. Although this stock is a very popular stock right now. It's one of the most popular stocks in the market, but this just shows the danger. You're basically taking on a lot of risk, but you're hoping for a higher return in the future. What I'm going to do here is just show you an example of another company that's actually profitable, just so you can see what it looks like. Now, I'm not giving away any of the stocks that I'm deciding on investing in. That's going to be in a future video, but I'm just going to show you what the revenue and net income picture look like for a company that's actually making money. Okay, so we've done the number one thing, which is find the right company size between 2.5 billion and about 10 billion. And then the second thing is only investing in companies that are profitable. Now, the number three thing is I want the manager of this company to be someone who I admire and respect and think that they are doing the right thing, or at least that they're moving in the right direction. This is highly subjective, because when you watch a video of somebody on YouTube talking about their company or their plans, oftentimes it's hard to know, but I think a lot of this is just very qualitative. It's not something you can put a number to, but it's a feeling you get. And a couple of the companies I was thinking about buying their stock, I decided forget about it, because I watched the guy on a video and I didn't like him, I didn't trust him, and I just quickly was able to kind of rule that out and then go on to the next small company. This trowel here, I got this to do some brickwork, to mix some concrete up and put it in between bricks and smooth that stuff out. I got this, and what's funny is I read the reviews on Amazon for this trowel, and it turns out a lot of the people who got this thing are using it for archaeological work. They're going on digs. Wait a second there. They're going on digs. They're going and digging dirt out of like archaeological sites to get bones and mastodon teeth and stuff. So this is apparently very useful if you're a archaeologist, you're out there in Egypt or in Canada or Rwanda or Zimbabwe, and you're digging in the dirt. I don't know where people dig for this stuff. I made that up. Anyway, this is a trowel, and I like it because that's what you got to do when you want to find companies that are going to be baller in the next few years. And the only way you can do that is really just do a lot of digging. And so I started out with like 40 different companies, and I just go through them. I really like YouTube. There was one company that kind of fell onto my radar, and I started reading about it, and all the financials looked good. And then I started watching YouTube videos, and all these people on YouTube, financial channels, were talking about this great stock. It was called Semler Scientific. And it made all the filters. I was like, oh, this looks like a good company. It's profitable. It's increasing its earnings. But then I noticed, going back like 3 years, 5 years, all these investor YouTube channels were making predictions on where this stock was going. And like the stock was so much higher before, and it's just come down and come down and come down. And then the more I read about and watched videos about this company, the less I really understood its competitive advantage. I'm not going to go too deep into what they make. It's a medical software device, but I will say this. I was not able to understand why this was the best device, and I was also not able to figure out who their competition is. And I think it may be that there are other companies coming out with better stuff. And this is a great way to lose money, is you put money into a stock where you don't really understand who the competition is, and you don't understand why this company is having a hard time perhaps right now going into the future, and you buy the stock, and then you see either the stock goes nowhere for years, or the stock price just slowly goes down and down and down. So watching YouTube and just watching as much as I could to learn as much about the business can be a really useful thing. So that leads me to the fifth and most important thing, which is circle of competence. Now, you may have heard of this, or maybe you haven't, but a circle of competence is basically drawing a circle. Ooh, I like that. It's drawing a circle around all the stuff that you understand. There's a certain amount of stuff that anybody knows well, and then there's a lot that we can't know everything. So what you got to do is stick to the things where you have a reasonable chance of having some kind of strong knowledge, some expertise, because winning at investing means you're buying a stock and somebody else is selling it. So if you are slightly smarter, if you have informed yourself a little bit better than them, you might be on the right side of that trade. You might be buying a stock where there's some value in that in the next year or 3 or 5 or 10. And that person selling it just doesn't see it. So you have to understand things better than other people. Otherwise, why should you become rich picking stocks and other people become poor? We're fighting for resources. We are trying to make money, and there's somebody who has to buy the stock and someone who has to sell it. So we want to be the buyers of really good companies, and I believe these 5 steps will help you become a much better informed investor. So running through them again, just as a recap, the number one thing is to pick companies that are small. So I look at between 2.5 billion and $10 billion. I will make exceptions if the company's a little bit smaller, or maybe it's a $20 billion company and I just love the company. I will buy stock in that company. So you don't want to be too rigid, but this just gives you a starting point. Number two, profitable. You want to make sure the company has already started to make a profit, meaning after they take all the sales, and then once they take all the expenses and pay all their workers and pay for all their materials, they have money left over. You want profitable companies. Why mess around with ones that aren't? Unless you believe that this is an excellent company and it's kind of at that startup growth phase and they're just on their way to profitability, just like all companies, including Tesla, including Amazon, at one point were not quite making a profit. You want to, if you're going to buy them before they're profitable, make sure that everything is stacked in the company's favor, that eventually it has a pathway to profitability. Number three, you want the manager or the leadership to be somebody that you trust and you admire and they have talent. There are different ways to find that. You can read about them. I prefer watching videos on YouTube just to get an idea of who this person is and see if their goals for leading the company are kind of in line with what I believe is believable and plausible for the future. Number four is watching YouTube. That's slightly different than learning about the manager, but I will watch videos on YouTube about that company. I'll also try to learn about the competition in that industry, because sometimes you'll watch a video about a company you're thinking of investing in, and then you'll find another company that's their competition that might even be in a more kind of dominant position or have a better competitive advantage. So just doing your YouTube research can lead you to new things you might not have known at the start of your search. And then number five is the circle of competence. So you just want to make sure that you are learning and building some area of expertise where you have an advantage over everybody else, because you can't know everything about all subjects, but you can be a very intelligent investor about a small number of companies. So that is it. I wish you guys well. Remember, only the mediocre can always be at their best. So glad you watched this. If you want to see the 10 stocks that I'm going to buy in the next week or so, then click the subscribe button, hit the notification bell, and that way when I make that video, you're going to see what I'm talking about. You'll see the stocks that I'm investing in. And if you have not yet liked the video, hit the little button. That will let other people who are interested in investing in small cap stocks know about this video. I am so glad you stopped by, and I hope you'll stick around for the journey and see which stocks I pick. And remember, they don't all have to be winners, okay? I am very happy with 6 of these working out well, even if I have 4 that don't. And what would be just amazing is if I could get 7 profitable companies that succeeded and their stock prices followed upwards, even if 3 of them don't work out. So you'll be along on the journey. I'm so glad you watched this, and I will see you in the next video.